Hey guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. So today I want to talk a little bit about how insurance actually works, but I also want to introduce you to a new insurance company in the South African market. It is called Glue. And what I absolutely love about it is that the word glue, or how they've done their branding, is that you'll see that the glue is in small letters and they've done away with the E. And this is to symbolize the financial togetherness that this financial institution actually stands for. But before I get into all of that, please do remember none of my videos constitute as financial advice. If you are, however, looking for financial advice, please speak to somebody that is certified and registered with the FSCA to give financial advice. So let's get into it. I think there's a very big misunderstanding about how insurance actually works, right? Funny enough, just a weekend ago, I was in the car with my mom and her two sisters. So we're driving back to the airport so that they can catch their flight back to Nelspruit. And we're having this conversation because both my mom and one of the aunts have already gone on pension, and the other one is going on pension next year. So she's like, oh my goodness, Nicolette, I actually do think I need to sit down with a financial advisor so that I can plan and map out how next year is going to look like. So I'm like, sure, you are absolutely correct. Please do. So she's like, before I sit with the financial advisor, can you just educate me on some stuff? So I said, look, I can do as best as I can on the things that I actually know. So the first thing she asks about is how some point in her life she let go of her life insurance policy because of some marital issues, and she let go of that life insurance policy because she didn't want her spouse to benefit from it if anything was to happen in the event of her untimely death. So I'm like, oh, okay. And then she's like, but I'm a little bit worried now because I've got children and I've got a child who is still of young age. He's still at school. And I don't want to find myself in a situation that if I do pass away, I don't leave any financial legacy for him. Yes, I've got the money to pay for funeral cover and cover all of those funeral costs, but I would like something that he has that can be for him and his benefit only. I don't want it to be something that he has to share with his siblings. So I go on to explain to her that there is, of course, the Wills Act, and then there is, of course, the Insurance Act. And under the Wills Act, which is her estate, that will obviously be shared if she's married in community of property with her spouse and the children that are still alive. But if under the Insurance Act, specifically a life insurance policy, the named beneficiaries are the ones who will get it. So she's like, okay, that sounds good, but I'm too old now. Should I still be taking out a life insurance policy? I'm like, look, you are never too old. And the reason why I say this is because insurance essentially is like having an umbrella. So you've got this umbrella and you've got it open up, right? As long as you're paying your premiums, that umbrella stays open. So you are literally saying, if the rain comes, I have an umbrella that is going to be open and I will be protected, right? Now, the moment you close that umbrella and you get rid of the insurance policy, you no longer have an umbrella. It does not matter that you have paid over the last couple of years. You do not have that umbrella anymore. And it's important to understand this because it's not only about not having the policy. You find sometimes that some people have too many umbrellas open. Now, think about it. An umbrella can only adequately cover one body, right? It's supposed to be. It's designed like that. It is a dome that covers one body. Now, if you have various other umbrellas, are you trying to cover your feet with the umbrella? The rain comes from the top. So it's just an analogy to get you thinking about how insurance works. So maybe we can take it step by step and try and explain how insurance works. First and foremost, you choose an insurance policy. Let's say you've chosen a life cover. You choose an insurance policy with a specific product provider. They are going to then make you pay what is called a premium, or you are going to be paying a premium. That premium is to ensure that you have that umbrella and it's open at all times, right? Your money and other policyholder monies are going to be pooled into this big pool. So we call that your pooled funds, right? From all insurance policy holders, right? Now, the insurer then assumes risk. They are saying to you, if anything is to happen to you and the storm comes in your life, so let's say you have disability, let's say you've got critical illness, let's say you've got an income interruption that is outside of your control, we will be there with the umbrella. So they're assuming the risk. And remember, it's not just risk from your life, it's risk from all the policy members' lives that are in existence, right? So they're taking that risk upon themselves. And if something does happen, they're saying, we will ensure that we pay you out from this pool of money that we've collected from the policy holders. So again, they will pay the claims from that amount of money, the pooled amount of money. So if any policyholder has an insurable event, they will then pay a valid insurable event. They will then pay from those pooled funds. But they also have the responsibility to make the insurance company profitable and to make sure that the money is available to be able to pay these big claims that may come up. So what insurance companies then do is that they will invest that money in bonds, in shares, in property, right? In different types of asset classes and financial investments, so that the money actually does grow. And this is again to ensure that when claims come, especially huge, large claims from their policyholders, they are able to pay those claims. But also, and most importantly, the other part is that they need to be profitable for their shareholders. An insurance company, like many other businesses, has a group of people that are called shareholders. These shareholders are expecting this business to be profitable, or else what is the point of being a shareholder of a company that is not profitable, right? They are expecting that when claims have not been paid out because maybe they are invalid, or maybe because their policyholders didn't claim, and when investment returns are really good, and when there is operational efficiency, they will be able to either get or see some growth of their business through a share price increase or through dividends that are paid to them. That is essentially how insurance works. And it's important to understand this, because when you are picking an insurance company, you've got to take this in mind. And the only reason why I'm bringing this up is because there's a concept of mutuality, which I don't think, other than, for me personally, other than PPS, I didn't know that there was, another mutual that was actually in the South African market. So when Glue introduced itself, that was also at the forefront. As I said, financial togetherness is a very important core principle of Glue. And it really excited me to start digging a little bit deeper into what do they mean when they call themselves a mutual? What are they talking about when they say financial togetherness? What is so different about them and any other insurance company that we have in South Africa? And that's when I started uncovering some stuff that I was like, oh my goodness, actually, it's not just about picking an insurance company, it's about picking one that is aligned to your core principles. So if you align with the principles of Ubuntu, if you align with the principle of istokfela, or understand how a stokvel came up in the first place, if you understand financial togetherness, you will start understanding why mutuality within financial services product providers is quite a differentiator. So let's talk about that. What is a mutual? This is a company that says we do not have shareholders. So remember back to the example that I've just explained about how an insurance company works. Those dividends and those investment returns and the operational efficiency that are going to go to the shareholders because now the company is growing, and yes, share price has gone up, and yes, we're paying out dividends. Well, in a mutual company, there's also what is called profit sharing model. Now, the profit sharing model speaks to the mutuality. It says that we are not having any shareholders in this business. Our members are basically our shareholders, right? So if you, by any means or whatever, have a life cover from Glue, you automatically go into this profit sharing model that Glue has. So you're part of them. You are financially together with all the other members that are part of that of Glue. So essentially, you will get a profit share policy. You will automatically go into a profit share policy. It's like an account, it accrues, right, over the years. If you remember, or if you do know, PPS, for instance, has a profit share model. However, you had to wait until retirement for you to be able to tap into that amount that has now accumulated over the years. So if you follow the story of Glue, you will hear that the previous CEO and the current CEO back in 2020, when we were hit with a financial crisis due to COVID, they got together and said, would it not be great if we could extend this mutuality to more South Africans so that they can actually benefit? Mutuality is not a numbers thing, it's a feeling. You feel that we're together in this thing, right? So they wanted to extend it. And over the years, up until I think 2023, 2024, 2025, they've been shaping this glue profit sharing model and mutuality approach to insurance. And they've come to the conclusion that it can be, extended to more South Africans. They just need to kind of recreate the eligibility of how do you become eligible to be somebody that can take out some of their products. So again, similar to PPS, but not the same. You need to be a professional. But in this case, you can either have a diploma or a degree, and you need to earn above 30,000 household income. So your household needs to bring in at least about 30,000 South African rands for you to be able to qualify. Then you do need to take up the life cover policy, and that's how you will then be eligible for this profit sharing. So then you have to be actively keeping your insurance policy for 10 years, because for 10 years it will start to accumulate. And after 10 years, you then will be able to withdraw 20% of that profit share account. So however much you have in there, you'll be able to withdraw 20% of it. And thereafter, every 5 years, you can withdraw an additional 20% right after that. So obviously, after 10 years, 20%, you're left with 80%. But remember that 80% starts to grow again continues to grow rather, because you are contributing more into your premiums, and you are not withdrawing, and they're investing the monies of the business. So technically, they're doing their part at the back to make sure that the business, again, stays profitable. And if the business is profitable, you get an accumulation in your profit share account. Then, as I said, after 5 years, 20% again can be withdrawn. And only after 25 years, or at the age of 65, you then are eligible to withdraw everything that is in your profit share account. Again, it's that thing of feeling like we are together in this thing. So again, if you go back to my example, that whole dividends that are being paid out because of investments being done really well, or claims not being paid because there have not been any valid claims, or because of operational efficiency going to shareholders, now it's going to members, simply because of this mutual approach to insurance that Glue has taken up. Isn't that fantastic? I find that to be really fantastic. And again, as I said, it's not for everybody. It's for somebody that says, one, I want to align my choices of financial services to my personal values and virtues that I believe in. But I think also most importantly is to also understand what they have on offer. Because yes, maybe I do like that they are, a mutual, but I don't like their products. So what's the point? I think also understanding insurance is important. There are two classifications of insurance. There's short-term insurance and there's long-term insurance. Short-term insurance basically is you are insuring an item, right? You are insuring an item. And then long-term insurance, you are insuring the ability to derive an income. So your income generation ability, that means your life, because you can't generate an income if you are not alive, right? So short-term insurance is on items, it's on a cell phone, it's on a computer, right? It's on household contents. Long-term insurance is life. It's my ability to be alive, my ability to derive an income, and my ability to be well enough to derive that income, which is why you hear about critical illness cover, which is why you'll hear about disability cover, which is why you will hear about income protection cover. If you go back and think about it, all of those things are essentially covering your life. Life cover covers when you are dying, or rather when you die, your financial legacy after that. In actual fact, what is quite interesting about the Glue Life cover is that within 48 hours, it has a needs benefit that it will pay out, which is 100,000 Rand within 48 hours. And this is to ensure that it covers, your funeral arrangements, so that your family is not scrambling around after your death, waiting for a claim to be processed. So they will accelerate that 100,000 Rand to pay out within 48 hours. Critical illness. If you unfortunately go to the doctor and you're diagnosed with a critical illness that says you're not going to make it in the next 12 months, they will then try and pay, or not try, they will pay out to you so that your family can deal with the treatments and, making you comfortable with those last 12 months of your life, so that you don't find yourself in a situation where, again, you are putting your estate under pressure because of this critical illness that you've now been diagnosed with. Disability. I mean, we take disability for granted because everyone thinks I'll never get disabled or I'll never become disabled, right? But the reality is that there are certain jobs. If you are somebody that works in the mines, you could get a disability, fumes, you could get disability from blasting. If you are the guys that clean the windows and you're on those high what are they called? Skyscrapers. So you clean skyscrapers. There's a possibility. If you're somebody that's on the road all the time because of your work, there's possibility of getting into an accident. And whether it's temporary disability or permanent disability, Glue Life Cover has a benefit under the disability cover to be able to assist you with that. And I think the last and probably most important one for all of us, especially young people, is income protection. I mean, I talk about it all the time. I'm like, I speak so much and my business is speaking. So can you imagine if I contract a laryngitis or something happens to my throat or my voice box and I cannot speak, which means I cannot do my job. You know what I mean? So it means that is out of my control. That is something that's out of my control for me to be able to perform my job. I need to know there is an insurance policy or a product that will then respond to that, because that is an insurable event that has happened. I am unable to derive my income in everyday normal circumstances. So once again, as I said at the beginning, it is really important to ask yourself, when you are choosing a financial services provider partner for some of the products and services that you know you need in your life, or you've had a conversation with your financial advisor and they've put a suite of financial products in front of you, how do you choose the one that is suitable for you, your needs, and your life? For some of us, it has to align with our values. It has to align with our virtues. So if you are the financial togetherness, the Stokvel, the person who believes in Ubuntu, then Glue is perhaps something that you would like to consider. What's great also about Glue is that they have their access is through two ways, right? So you can speak to a financial advisor, as mentioned. Please make sure that they are registered so that you can start doing your needs analysis and they can give you some sort of advice in terms of what products you're looking for. And the second one is, of course, they are digitally led, right? It is one of the insurers in the country that has decided that they want to be digitally led, but also a good balance of being digitally led, but also human interaction. So you'll even see with their underwriting, they've got a simple, basic, straightforward underwriting machine that, and in fact, you won't even realize you're actually now sitting on the underwriting machine that will ask you straightforward questions so that it gives you a fair premium based on your life. How fantastic is that? I want to leave it here because I'm really interested in hearing, how did you choose your financial service provider, specifically for risk management, like life insurance, disability cover, income protection? What were the reasons for how you chose yours? Was it the financial advisor put that in front of you and that's how you chose it? Or does it align with your values and your virtues? Please do remember, none of my videos constitute as financial advice. If you are, however, looking for financial advice, please speak to somebody that is certified and registered with the FSCA. I will see you guys on the next one. Bye.